front and center tomorrow will be the opening speech by Fed Chair Jerome Powell, which will be tomorrow afternoon. And there we expect the Fed Chair to comment or indeed discuss some of the results of the ongoing Fed strategy review. And we believe, as I think most investors, that that review would recommend that the Fed adopt a form of average inflation targeting. Discussions with clients seem to suggest that there are varying views really about what exactly the Fed chair is going to say. And I think the big differences really are in terms of the level of detail that the Fed chair will want to provide. And for those who are expecting a strong, dovish message, really they're expecting really a fairly detailed discussion of the level of the mean inflation target, really the measures, the way that the Fed wants to get there, whether they want to tolerate or stimulate inflation overshoot, and indeed whether they're going to adopt maybe even yield curve control down the road. Whereas for those like us who are, I guess, expecting a somewhat less and more guarded assessment by the Fed chair, really think that the Fed is just going to hint that the Fed chair will be hinting that the Fed would be adopting average inflation targeting, but would not provide the level of detail that many are hoping for.
Valentin, some of the early analysis suggests if we do get some moves towards this average inflation targeting, it could have the trigger of steepening the yield curve in the United States. And we've seen some early moves suggesting that type of market reaction. If you take a look at the 10 and the 30, very early stages when we talk about pricing ahead of any changes. What do you expect the ramifications to be for the US dollar then? Because clearly it's been in decline in recent months.
So the main lens, the main channel for which investors are analyzing the connection between average inflation targeting and the dollar is lower real yields in the U.S., which imply flatter Treasury yield curve contained nominal yield at the long end. However, one unfortunate or undesired consequence from the average inflation targeting could be what you just described, actually higher long end of the Treasury yield curve and their steepening of the Treasury yield curve, especially if the Fed remains undecided about the framework in terms of policies they want to implement if the long end now misbehaves, if the curve does bear steepen. So I think that there is a risk that if indeed, say tomorrow, Fed Chair Powell does pre-announce the pivot at the Fed towards average inflation targeting, but really for us, really just does not discuss any potential framework policy steps to really keep the curve flat or indeed to contain any rally in the long end of the curve, that could actually be supportive for the dollar by virtue of higher inflation expectations and indeed higher long end of the Treasury yield curve.